if one candle on a scalp is like wrecking your account and wrecking your soul, you guys are in too big. You're in too big. But coach, my stops, if your stops are all too tight, you're probably all in too big. Does that make sense?
Yeah.
So let's just, everybody again, position size is king or queen, however you want to say it, right? Position size. And from there, then we can control the stops, how much it's moving, right? Maybe on your scalps, you go in a little bit smaller, but then you can allow them to breathe a little bit more. So if you do anticipate that, NVIDIA is having big moves, well, if you go in a little bit smaller, you're allowing the bigger moves without it damaging your account and letting it breathe and do what it needs to do until it gets to where it's going to go. So if you are used to these patterns and maybe NVIDIA today is like all over the place like this, well, maybe go in half the size and let it work through all this nonsense. Because if it breaks here, I'm out. If it goes up here, I'm golden. Make
Right.
sense?
Yes, coach. This is about a straddle that I want to do. It's on NVO, which is the people who make Ozempic. Anyway, they're announcing Thursday morning before the market opens. I missed it with Eli Lilly today. I thought they were announcing after, but they announced it this morning. It went up $50. So I'm wanting to do it on NVO. And
Yep.
I'm curious I know it needs to move quite a bit. So I want to make sure I'm doing the right strike prices. And I'm hoping maybe you can educate me on that a little bit.
Yep, absolutely. So it's NVO, right? Novo?
Yes, yes, sir. Yes, sir.
Yep. Okay, so a couple things, couple rules. Is it tonight they're doing the earnings or tomorrow? Is that what you said?
They do it Thursday morning pre-market, so it needs to be done Wednesday night.
Gotcha. Okay. Sorry. So everybody straddle on earnings. So the biggest thing that you want to do, number one, the timing of when we buy the straddles. We want to buy these at the absolute end of the day. Okay. So be ready at 355, 356, 358. You guys have seen me one day. I accidentally bought them too late and I couldn't get in. That can happen. So I just try to get in by the end of the day. That way you're not already, losing money to time decay. Plus it's moved all over the place. Buy it at the end of the day and then we'll go from there. And obviously there's no stops in the post market. Then there's no stops in the pre-market for the next day. And you're absolutely right. The only way a straddle is going to make money was with huge volatility. So the other thing that we want to do, minimum contracts of 30 days. I don't like to buy anything that's like a week. You can, but you're going to lose time decay as soon as you wake up. Both of the call and the put, if it was a week out, you will lose typically around 15 to 20% of both of them. Okay, so you already lose the day you wake up. So even if it was great, you already lost money. So I try to do at least minimum, if this is a lotto style trade, minimum 30 days out. If you have the money, 60, 90 days, 90-day plus is always preferred. Now, strike price, I always do at the money strikes, including straddles. The only time I'm not doing at the money for any options is when I'm doing leaps. When I do leaps, meaning I'm going to hold as a long-term investment, I go deep in the money. When I'm doing straddles, I don't need to do that. So what you'll do, partner, on that Wednesday night, you're going to look at where it is in the money, or I'm sorry, at the money is either going to be one bracket in or one bracket out. See it here? So
yes, sir. Yes, sir, I do.
So if I was buying these right now, ATM at the money, if I was buying these right now and it doesn't matter, you just take your pick. So the other thing that I'm going to look at when I'm going to do this is I want to have an open interest that makes sense. Okay. So what does that mean? Well, if I was going to buy this one, which is out of the money at 131, look how terrible the open interest is right here. You see this? So the put side, you might have a problem selling these. If you're like, well, I want to buy 50 contracts, right? It was right here, by the way. It was 26. Well, that's a huge red flag. What if you can't get rid of the contracts?
So, Coach, what's a good open interest number?
Well, it depends on how many you want to buy, right?
Got it.
Yeah. Think about it. If I'm going to buy 100 contracts, there better be a lot, at least 1,000 If I'm going to buy one, then I'd probably want at least 100. Does that make sense?
Yes, thank you, Coach.
Yeah, because if you're like, oh, I want to buy 15 contracts, but there's 26 people that are like, oh, it's too tight. So not only then are we looking at the money, we're also looking at open interest. That is a huge number for us. If there is not a good open interest at that area, so let's look at this. Let's go 30 days out. It's the 30th. So let's see, it'd be what, May, the end of May. So right here, and look at that. Look at the open interest. You don't see a lot of open interest out here, right? None. Look at it. There's nobody home. So this is dangerous. If I was like, well, I want to do a 131 strike, look at the open interest. There was 0 for puts and 235 for calls. Everybody see it? That's dangerous. Now, that's probably because the price has been running up, which means that nobody's been home. That's why you're seeing everybody sitting here at the 125 range. See them all? And 127. So again, if there's nobody home ready to buy your contracts, I can't do at the money. If that is the case, I don't buy farther out of the money because it typically takes longer for you to make money the farther away from the dollar you are. So then I go in, right? I always go in. I'll pay more, right? If you look at the pricing, I'll pay more the deeper in the money I go, but I need to find something with a good open interest. And right here would be perfect. See the 127? That is your move if you were buying 10 contracts. See it? And here's the thing, right? Like I said, the farther out you go, the longer it takes. Like the more movement there has to be to get closer to your break-even price, or in this case, your strike price, before it starts to make money. So if you're really far out, but it doesn't, move crazily, you don't even start to make any money. So now all you're doing is losing money on time, waiting for it to make that big of a move. Okay. And this goes for all of your options. If you guys notice, if I was even scalping right now and I bought these versus these, because of my delta, right? If you look at this, this is 53 cents on the dollar. This is 67 cents on the dollar. This is closer, right, to the actual price, because your price, remember, is your strike price plus your mid price is your break-even price, which is really what it's using to find out where it is here. So if I am closer, deeper in the money, more on the dollar, right? 67 cents is worth more than 53 cents. The more money it makes in my favor, because the faster it moves, because the higher the delta. Does that make sense, everybody? Yeah, it's having a bigger piece of the pie, right? You have 67 cents now working for you instead of 53 cents. Well, if you have more working for you, that's going to go faster. I hope that makes sense.